For more on China's trade and its outlook, we're joined again by Yan Liang. She's the Endowed Chair and Professor of Economics, Willamette University. Good to see you again.
Good to talk to you, Phil.
These numbers, okay, so we do a lot of numbers here. All I know it was really bad in 2020, then it got better in 21, and then a little better in 2022, but there's still a lot of problems in the system. And these numbers from China, I think, highlight that. In a way, it's better than last year, but what's the problem? Is it just COVID to blame, basically?
Right. I think the reasons are twofolded. So there's the supply side reason, which has to do with COVID and the lockdowns, and that disrupted the factory activities. As we know, that factory output growth decelerated in November to 5% compared to October, which was 6.3% growth. So that's the supply side of disruption. But then the demand side, I think, as the reporter talked about, global demand has been weakened because of, inflation and the interest rate hikes by various central banks. And also, I think one important point here is that the demand has also pivoted from goods to now more services as the concerns about COVID receded. In the United States, in European countries, people tend to spend more money on travel, dining out, and some other entertainments, and so that reduced the demand for exports.
I saw a statistic. It was now granted it was from the U.S., but other countries were involved between the United States and China, that the amount of orders, the dollar amount of orders, was actually down from last year. So one could argue that because of the supply chain issues, businesses are ordering less, or because of the concerns about the economy, businesses are ordering less. Which one is it?
Well, I think both are the forces, right? So it really depends on which one dominates. And so I think earlier in the years, before the holiday seasons, companies from the United States, they made more orders to stock up their inventories. But now, once that peak has gone down, then we're seeing that a lot of companies are having high inventories and consumers are worried of more discretionary spending, and so they're holding up. And so I think all of these contributed to the slower export growth this year so far that we have seen. But again, if you look at the entire year, the first 11 months, China's exports has gone up by 8.6% year to year. So I think still, exports are important, a contributor to China's demand.
The challenges of these lockdowns, right? It's no secret there's been lockdowns in China, and that's impacted the flow of people. It's impacted the flow of goods, and the rest of the world is obviously impacted because if China's impacted, well, they are too. Now, we've seen the relaxation in some of the COVID measures. How much of an impact is that going to have to appease or relax some of the concerns that the rest of the world has on supply chain issues?
Yeah, I think, again, I think the relaxation of the COVID, could have some, I would say it's a bumpy road ahead because I think, government has launched the 20 measures to relax, and then just yesterday, they put forth another 10 measures to relax. But again, I think this is really a recalibration of the COVID policies, but then things could change depending on the COVID cases. So we're seeing better situations now. The COVID daily cases now have gone down from the peak of 40,000 to now 20,000. And about 15% of them are symptomatic. So I think, things are getting better, but again, it will take some time for the whole relaxation to roll out. And also in addition to that, I think we have seen countries like the United States has put forth a series of industry policies trying to bring the production back home. And then they have the interest rate hikes that dampen consumer demand and the income. So I think all of this would play a role in terms of how it shapes China's exports. So that's why I think it's important for China to pivot inward too, to trying to boost domestic demand.
A lot of countries, China, the U.S., everybody wants to obviously protect their own country, right? So I think we all get it. And there's this little conflict in Eastern Europe called Ukraine, and it's caused a lot of chaos at minimum in Eastern Europe, but also supply chains throughout Europe and into the U.S. Now, from the Chinese perspective, they have an oil issue to deal with. But they also have demand problems coming in from Europe as well because everything is chaotic. And I don't know if they're benefiting or they're not benefiting. But what's your take on what to look forward to next year, assuming that this conflict gets resolved?
Right. So I think that's a big if. I think there's definitely, like you said, different sort of mixed impacts. I think one thing that is clear is that, the exports to the US or to Europe would likely to continue to soften because their economies are not doing well. But then at the same time, the supply chain could improve over time if if the conflict gets resolved. But at the same time, and again, I think that it's the emphasis is that despite all these global turbulences, because we know that's not just the COVID, that's not just the supply chain, but there's a lot of geopolitical moving parts. And so I think what is important for China is again to try to bolster domestic, demand. So with the recalibration.
Very quickly, Professor. Very quickly,
Yeah.
Professor. We often talk about the exports. What about the imports? Chinese domestic demand. With these lockdowns, loosening up, we saw that around the world. The people get crazy. They all go shopping and they all want to come out and they all want to do stuff. I mean, that could be a big positive potentially, could it not?
Yeah, so I think that's definitely right. But again, the relaxation of COVID is going to take some time. People needs to be more comfortable going out and to shop again. Not to mention, with job losses, with income losses, that also dampen the consumer effective demand. So I think there's a lot more policy measures that need to be put in place. And I think the Bureau Paro just had a meeting yesterday, and they did mention about using more fiscal policies to sustain demand. And I think that should be not just infrastructure spending or some sort of consumer, subsidies, but more importantly, giving more fiscal transfer to the local governments and so help
Right.
them to stimulate local economies.
It's
Yeah,
complicated. Professor Yan Liang,
absolutely.
always good to see you. We'll see you again soon. Thank you.